So this is an analysis level TBS, which means I have to be able to use the information to identify patterns and relationships. So as always with the TBS, the first step is to scan the TBS. Now I'm looking at this TBS, the first thing I see is an exhibit. Now note for future information, when a TBS has exhibits, they will always appear at the top. And a TBS can have more than one exhibit. In fact, the more complex TBSs could have 8 exhibits. So be forewarned. Next, I see that we're talking about analytical procedures being performed. And if I continue to scroll down, I see that I'm going to need to compute an estimate for different expense accounts based on the exhibit information and the additional notes. So the 1, 2, 3 tells me that I'm going to need to enter a number. Then if I open the exhibit has year 1 and year 2 numbers plus some additional notes at the bottom. So now I'm ready for a more detailed review. TQ is a calendar year corporation, and the auditors are looking at payroll-related expenses for year 2. Specifically, the auditors are performing substantive analytical procedures which require development of an estimate that can be compared to the client's number. They've also established materiality at 5% of the year 2 account balance. And then the usual instructions are present. I'm going to be entering my number, my auditor estimate. The numbers that I enter need to be rounded to the nearest dollar, and each situation is independent. If I look at the exhibit, I see that the exhibit has year 2 and year 1 numbers, mostly for the payroll-related accounts plus sales revenue. The information at the bottom provides unit sales information for year 1 and year 2. Now, just for your information, the year 1 numbers are audited, and the year 2 numbers are the client numbers that we are auditing. How many items are there? There appear to be 6. And which ones look harder or easier? So the easier ones, or the easiest ones, look like bonus expense and short-term disability expense, because the estimate seems pretty straightforward without any complications like mid-year changes. The harder ones have more information and more complications, like hourly payroll expense, which has increases in the FUTA tax rate and in payroll. You don't need to start at the beginning and do them in order. If you want to start with one that's easier, that's okay. Just check to make sure you've tackled all of them before you leave the TBS. Okay, let's go ahead and tackle one of these. Bonus expense doesn't look too difficult. The notes say bonus expense for year 2 is expected to be 7% of total prior year wage and salary expense. Now, note that the estimate is based on prior year expense, so that means year 1 numbers. What is total prior year or year 1 wage and salary expense? For that, I need to look at the exhibit. So I'm going to need to add $12 million and $4,850,000 in order to get my total. So for that, I'll use the calculator. So I'm going to add 12 million plus 4,850,000, and that gives me 16,850,000. So that is my total prior year salary and wage expense. Now the note said that the bonus was expected to be 7% of the prior year total wage and salary expense. So now I need to multiply by 7%. Going back to the calculator, I'm going to multiply by 0.07, and that gives me 1,179,500. So that's the estimate of the year 2 bonus expense that I'm going to enter into the TBS. Now, I'm going to enter 1,179,500 without commas or dollar signs because the system automatically formats the number entered, and you can see what the system is receiving under formatted response. So I'll hit accept, and now it has my number. And then one more thing, the system will also reject unacceptable characters. So for example, if you hit X instead of 6, it would not enter X and it would not enter the 6 either. At this point, I would normally be done with this item, but I want to show you how this problem could be expanded to require you to use your estimate to evaluate the client's year 2 number. So remember, the client's year 2 number for bonus expense was $1,315,000. So that was this number here. And we got $1,179,500. If I compare my estimate of $1,179,500 to the client's number of $1,315,000, I get a difference or variance of $135,500. I need to use the absolute value of this number. Now, is this difference significant? For that, I need to compare it to materiality. Materiality was set at 5% of the client's actual year 2 number. When I compare materiality of $65,750 to my variance of $135,500, I have to conclude that the current year number requires further investigation. I can't sign off yet. More work is needed. Let's try another one. How about office salary expense? So the notes indicate that average salaries increased 4% effective July 1st, year 2. Headcount was 40 in year 1 and increased to 48 on July 1, year 2. So the salary increase and the headcount changes occurred July 1 of year 2. Since TQ is a calendar year company, the changes only affect half of the year. Now, how do I come up with the estimate for year 2? Since the changes didn't occur until halfway through year 2, the first half of year 2 should be like the first half of year 1. So I'll start with the year 1 office salary expense and divide by 2. That will give me an estimate for the first half of year 2. So in looking at my numbers, I've got office salary expense for year 1 of $4,850,000, which I need to divide by 2. If I pull in my calculator, I will take $4,850,000, divide by 2, and that gives me $2,425,000. Next, I want to try to estimate the second half of year 2. Now, I remember that the headcount changed on July 1. If I compute an average salary for each person during the first half of the year, I can use that average salary to begin the computations for the second half of the year. So I'm going to divide the half-year amount, the $2,425,000 that I previously calculated, by the headcount in year 1. That will give me the average half-year salary per person. So I'm going to take $2,425,000 and divide by 40, and that gives me an average of $60,625. But there was another change, the mid-year salary increase. So salaries increased mid-year by 4%. So I need to add another 4% to that amount to get my average salary for the second half of the year. So I'm going to multiply the 60,000 by 1.04. So in my calculator, I'll come over here and multiply by 1.04, and that gives me 63,050. So that is my new half-year average amount, which I will multiply by the headcount for the second half of the year, which was 48. So in my calculator, I'll now multiply by 48, and that gives me $3,026,400. So this is my estimate for the second half of the year. So now I need to take my estimate for the first half of the year and my estimate for the second half of the year and add them together to get my total estimate for the year. So in my calculator, I'm going to add $2,425,000, and that gives me an estimate for the entire year of $5,451,400. So that is my year 2 estimate or expectation. So now I need to enter that into the system. So I will enter $5,451,400. Again, I would be done at this point, but let's go ahead and evaluate the number and see if it's any good. Remember, to evaluate, I needed to first calculate the difference between my number and the client's number. My number is 5,451,400. I need to compare that to the client number, and the client number is 5,092,500. When I compare the two numbers, I end up with a variance or difference of 358,900. Then the final step, to evaluate that difference and determine if it's significant, I need to calculate materiality. Materiality, if you'll remember, is 5% of the client's actual number. So I'm going to calculate materiality, which was 5,092,500 times 5%. That gives me materiality of 254,625. When I compare that to my difference is larger. I therefore cannot sign off on the client's number. I'm going to have to do further investigation. At this point, I'm able to go ahead and submit my answers, and I wanted to show you the resources that are available to you. First, there is a discussion of analytical procedures, including the substantive analytical procedures that were performed in this TBS. Then there are detailed explanations for each of the different types of expense. So remember, we did bonus expense and we did the office salary expense. So detailed explanations of the computations that we made are in the explanations. And then finally, if you need additional information, you can click on the link to the chapter, and that will provide far more information about analytical procedures. So a few things to remember from this TBS. Extra information was included on sales dollars and units. It isn't necessary to use all of the information provided. Next, read the information carefully to ensure you're computing the numbers correctly. There may be slightly different versions of this TBS with slightly different numbers. Third, be methodical. Work your way through the information provided and the steps needed. For example, you needed to compute the wage increase for half of the year, not the entire year. Fourth, check your math. The math was pretty easy, but it is also easy to hit the wrong key and make a mistake. And then watch the clock. If you hit 20 minutes, stop and move on to the next TBS. You don't want to run out of time and not be able to even start the next TBS. It could be the easiest one, and you'll miss raking in all of those points. This is an application level TBS. An application level TBS requires you to know something and then to apply that knowledge to a set of facts. Now, this is also an option list TBS, which means that you are provided with a list of possible answers and you will need to select one of them. The first step is to scan the TBS. What topic is being addressed and what am I being asked to do? I can quickly see that this TBS is testing fraud knowledge because of the reference to fraud risk factor, and it's asking me to identify the fraud risk factor for a set of scenarios. Then I need to select an answer from a set of choices. Now that I have a feel for the TBS, I can jump into the details. I want to carefully read the overview and the choices that have been provided. The instructions are pretty standard. I will select an option, and each option may be used once, more than once, or not at all. And then the overview says that I will need to determine if the scenario is a fraud risk factor related to attitudes, rationalizations, opportunities, or incentives pressures. And then second, whether the risk might result in misstatement from fraudulent financial reporting and from misappropriation of assets. Aha! The first requirement addresses the fraud triangle. The fraud triangle identifies 3 conditions that may indicate the presence of fraud. incentive, opportunity, and rationalization. So I need to figure out if the factor is something that motivates a fraud to be committed, or provides an opportunity for a fraud to be committed, or rationalizes the fraud so that it can be committed. The second choice looks at the two types of fraud that auditors are interested in: fraudulent financial reporting or asset misappropriation. When I look at the answer choices, I see that I have both fraud risks for each of the three fraud triangle components. So I have 2 for attitudes, rationalizations, 2 for incentives, pressures, and 2 for opportunities, and the 2 being asset misappropriation and fraudulent financial reporting. And then I have a 7th choice, which is basically none of the above. I'm now ready to tackle each scenario. I'm not going to do all of them, but I've picked out several good examples. For each scenario, I will need to, 1, determine if it is a fraud risk factor or not. So that's a yes or no question. 2, if yes, which component of the fraud risk triangle is it? And then 3, which type of fraud is it? Asset misappropriation or fraudulent financial reporting? This scenario says significant related party transactions not in the ordinary course of normal business. Now, okay, related party transactions don't always mean fraud, but significant transactions not in the ordinary course of normal business. So transactions that the business doesn't normally engage in and they're significant, this is a problem. For example, selling an asset to a related party at an inflated price. So now I know the answer to the first question. Is this a fraud risk factor? Yes. What about the second question? Which component of the fraud risk triangle is it? Well, it clearly isn't rationalization. There's nothing in here justifying a fraudulent act. And it isn't incentive. Nothing was said about why the client or the related party might be motivated to enter into these transactions. So that leaves opportunity, which is the best answer. Because there is more control over a related party transaction, management has the opportunity to enter into transactions that hide the true intent of the transaction. And then the third question, is it fraudulent financial reporting or asset misappropriation? This one is easier. No assets were identified as being at risk, so it is fraudulent financial reporting. Significant related party transactions that were not normal business transactions could be fraudulent transactions used to inflate earnings. So I will select opportunities and fraudulent financial reporting misstatements. Here's another one. Behavior indicating displeasure or dissatisfaction with the entity or its treatment of the employee. First, is this a fraud risk factor? Yes. Unhappy employees can be a source of fraud. Second, what component is it? Attitude rationalization. Because unhappy employees can use their unhappiness to justify committing a fraud. For example, the company owes it to me because they didn't give me a raise, or they aren't paying me what I'm really worth. And third, is it fraudulent financial reporting or asset misappropriation? This time it's asset misappropriation. An unhappy employee doesn't usually have the ability to make fraudulent entries that would materially misstate the financial statements. But employees do have access to assets which they might steal or abuse. So I will select attitude rationalization and asset misappropriation. Let's look at one more. Management failing to correct known significant deficiencies on a timely basis. So is this a fraud risk factor? Yes, because weak internal controls can lead to fraud. Which component? Now, I included this scenario because I actually got it wrong the first time. Weak internal controls should mean opportunity, right? Actually, I needed to read the words more carefully. Management has failed to correct known significant deficiencies on a timely basis. So management has deliberately chosen not to fix serious internal control problems that have been identified. This is attitude rationalization. Management's cavalier attitude toward internal control may mean an equally cavalier attitude toward financial reporting, which in turn could mean a willingness to commit fraud. Which type of fraud? Fraudulent financial reporting, because of the emphasis on management's attitudes and actions. Management has the ability to commit fraudulent financial reporting, and specific assets at risk were not mentioned. So I will select attitude rationalization and fraudulent financial reporting. So I want to show you the resources available to you within this TBS. So first, you have detailed explanations available for each of the scenarios. So there's one for related party transactions, which we talked about. There's one for employee behavior, and there's one for failure to correct significant deficiencies. Second, it starts off with a discussion about the fraud triangle and a description of the components, as well as an explanation about the two types of fraud that auditors are interested in. And then finally, if none of this sounded familiar to you, you have the ability to click on the link that will take you to the chapter for detailed coverage of this topic and how it fits into an audit. A few final tips to remember from this TBS. First, understand the terminology and the concepts. Remember, in an application TBS, you needed to know something and apply it. In this case, it was understanding the components of the fraud triangle and the two types of financial statement fraud. If you didn't remember the concepts, use the information provided in the explanation or use the link to the chapter to refresh your memory and solidify your knowledge. Next, read carefully to ensure you understand the choices. Remember, I made that mistake on the one about significant deficiencies. And then last, this is the easiest type of TBS. There are no computations required. There's just a little bit of thinking. So you shouldn't run into timing problems, meaning that you take too much time. Instead, the danger with this one is going too fast and missing key words or misreading words that then result in wrong choices.
In this video, we're going to walk through a document review simulation, or DRS. This is a type of task-based simulation, also called a TBS, that presents some form of written business communication like a memo or notes to the financial statement. We're then asked to evaluate several underlined passages for potential corrections or deletion. Let's review the steps for approaching a DRS and then use those steps to respond to an actual question. I typically approach a question like this with the following steps. I read the instructions to know what I'm being asked to do. For a DRS, the basic instructions are generally very similar. I would recommend practicing a number of DRS questions so you know what to expect on test day. This will get you familiar with the general rules, the question format, what it looks like when you've answered all the questions, and how to use the resources in the testing environment. This should make life a bit smoother on test day. Of note, you'll see that you need to select an answer even if the original text is correct. We'll want to see check marks on all of the requested passages. Next, I do a quick read of the document. I like to know the general topic being covered in the TBS. This allows me to pull together a framework from my accounting toolbox to help me identify the useful information from the document and the exhibits. I also use this as an opportunity to develop my plan of attack. Do I need to think about all of the steps together as one unit, or can I break this task down into smaller parts? After reviewing the document, I skim the title of the exhibits. Using the framework from the last step, I use the titles to determine which exhibits I'll need at each step of my process so I don't get overwhelmed by having all of the exhibits open at once if I don't need to. Then I use all of the information I have to tackle the questions. Finally, I confirm I've responded to all of the questions being asked before I move on to the next question. Note that the passages are going to start with a dashed underline. Once you make a selection, you'll see a check mark next to the passage. We want a check mark on all of those underlined passages, even if we didn't make a change. Let's use this process to try a DRS together. First, we'll read the instructions. We need to know what we're being asked to do. Here, I can see that we're being provided with the notes to the financial statements, and we're asked to determine if any changes are necessary. As in most DRS, we're told to click on the underlying text and either select the correction, indicate that no change is needed, or that we should delete the text. Be sure that you select original text if no change is needed. Do not leave the question blank or untouched. Again, the last paragraph of the instructions are typically included in our DRS. Next, I'm going to skim the document. I can see that this is about leases. In forming my framework from my toolbox, I know that I immediately want to be thinking about operating versus finance lease. This means I'm thinking spot 7590. Is this a specialized asset? Do we have a purchase option? Is the title transferring at the end of the lease term? Is the lease term the majority of the economic life of the asset? And is the present value of the lease payments the majority of the fair value of assets? Again, this framework will help me identify the useful information in the document and the exhibits. From my quick review, I can see that we have a warehouse lease and an equipment lease. It looks like we can evaluate each lease separately. That tells me that I can compartmentalize the task and handle one lease at a time. Next, I'm going to quickly scan the titles of the exhibits. I see that I have some additional lease notes, information about the warehouse lease, and information about an equipment lease. Since I know I'm going to handle the leases one at a time, I'll likely need the additional lease notes for both leases and the respective lease document as I work through each lease. This means I likely just need 2 exhibits open per lease. Let's start with the warehouse lease. We signed a 10-year lease for a warehouse with a fair value of $1 million with annual lease payments of $24,000. Then we encounter our first underlined text. It says the company accounts for the lease as an operating lease. There is no right of use or lease liability recorded. The next paragraph tells us about the accounting treatment for an operating lease and provides the annual lease expense. The last sentence is another underlined passage about the interest accretion and cash payment in year 6. Before we go much further, we should look at our choices. Sometimes it's best to work smarter, not harder. From our general framework, we know that we need to record a right of use asset and a lease liability at the present value of the lease payments for both a finance and an operating lease. So we know that the current text for the first underlined passage can't be correct. We should also use context clues here. The second paragraph discusses operating leases. Therefore, it wouldn't make sense for the correct choice to be that this is a finance lease, so we can eliminate choices 4 and 5. This means we're down to either delete this text or option 3. We account for this as an operating lease, and we record a right of use asset and a lease liability at the present value of the lease payments. We've got our answer, and we didn't even have to open all of the exhibits. What if we didn't have the context clues to eliminate some of the options, or if deleting the sentence is the best approach? We need to determine if we have an operating lease. We would open the additional lease notes exhibit and the warehouse lease exhibit. The lease tells us much of the same information regarding the lease terms. It's a 10-year lease with payments of $24,000. We learn from the lease document that the warehouse will be returned to the lessor at the end of the term. Next, we look at the additional notes. We can see that the warehouse has a useful life of 40 years and that the present value of the lease payments is $161,040. Using our spot 7590 criteria, we can determine the type of lease. This is not specialized lease property. There is no purchase option. The title does not transfer to the lessee at the end of the term. The 75 test is based on the remaining economic life. Here, there's a 10-year lease out of a 40-year economic life, or 25%. That's less than 75%, so this criteria does not move us to a finance lease. Finally, the 90% test is based on the present value of the lease payments being substantially all of the leased item's fair value. The present value of the lease payments is $161,040, and the fair value is $1 million. We're at 16%, which is less than that 90% cutoff, so we're still an operating lease. So we have an operating lease, and we know that the right-of-use asset and the lease liability should be recorded at the present value of the lease payments, which was given to us in the additional lease notes, again, as $161,040. Choice 3 is the correct choice. Note that we now have a check mark after our response. Our next underlined passage is asking us about the accreted interest expense for year 6. This means we likely need to calculate one or more amounts. The given text says $12,883 in accreted interest expense and $11,117 in cash. This is likely incorrect. The cash payment is $24,000. Let's look at our options. We've eliminated choice 1. Choice 3 says that there is no interest expense for operating leases. That's not true. So we will need to recognize interest expense, so we can eliminate choice 3. Interest expense for an operating lease is the carrying value of the lease liability times the interest rate implicit in the lease times time. Here, we recorded the lease liability as the present value of the lease payments, or again, $161,040, times the 8% interest rate that we got from the additional lease notes. We don't need to multiply by time as this is outstanding for the full year. We get $12,883 as our accreted interest expense. For an operating lease, we amortize the right-of-use asset as the lease expense less the accreted interest. So here, that's $24,000. Less the accreted interest of $12,883 that we just calculated, giving us $11,117 as our right-of-use asset amortization. We'll select choice 4 and confirm our check mark. We're done with the warehouse lease, so I'll close the exhibit and open the equipment lease. We'll need to keep the additional lease notes open. The equipment lease will be tackled in a similar manner. You should go to the question explanation to walk through those calculations. I'll select answers for the equipment lease as though we worked through it. I'll confirm that all of the underlined passages have check marks before moving on. Let's see if we were correct. Yes, we selected the correct choices. After you submit your responses while you're studying, be sure to read through the background explanation and the responses for each choice. This is a great opportunity to use the flashcard feature from the explanation. Please note that you can use the references at the bottom of the explanation to take you back to the textbook. I hope this helps you work through the document review simulations and that you're able to get them under about 20 minutes by test day. If you use the UWorld system as designed, I know you can be successful in achieving your goal of passing the CPA exam. In this video, we're going to walk through a numeric entry simulation, specifically one with many exhibits. This is a type of task-based simulation, also called a TBS, that provides information using a variety of exhibits and asks you to respond with several calculations. These are free responses, but they will be formatted for you after you enter your answer. However, you do want to pay attention to the instructions regarding things like rounding, how to enter negative numbers, etc. Again, keep timing in mind on these questions. You generally want to keep these under 20 minutes. Some of the questions will have a number of exhibits. You'll want to have a plan in place so you aren't overwhelmed by the combination of free response, or lack of multiple choice options, and the quantity of information. Let's jump in and figure out how to tackle a numeric entry simulation. I like to start by reading through the question so I know what I'm being asked to do. This also gives me an opportunity to quickly brainstorm what I already know on the topic using my whiteboard or perhaps the notes feature in the UWorld system. Let's read through. We can see that we're preparing our financial statements for the end of year 5, and we're going to make adjustments to our inventory balance. Next, we see that our terms for purchases and sales are FOB destination. When I see terms like FOB destination, I first recall what that stands for, free on board destination, and what it means, that title transfers when the goods arrive at the purchaser's destination. When I'm the seller, this means I don't recognize the revenue and take the goods out of inventory until it arrives at my buyer's location. When I'm the purchaser, I don't put those items into inventory until they arrive at my location. Second, this is a clue that I should be looking for adjustments relating to the cutoff or timing of inventory deliveries. We can then see that the remainder of the instructions tell us that the description of the adjustments is in column A and that we will enter an amount in column B. Further, we should enter additions as positive whole numbers and deductions as negative whole values. Also note that not all of the rows may be necessary. I then briefly read through the adjustments I might need to make and read through the exhibit titles. This will help me know which document I need as I work on each row of potential adjustments. I will likely need the unadjusted inventory subledger detail exhibit for most of the responses. The packing slip from computer company is most likely associated with a shipment received from a vendor. This might be good for row 4. We'll open the document and see that we ordered 100 cords, but only received 80. Row 4 seems like a good match. We have an email regarding delivery of 250 tablets. I'm not sure what this might be about, so I'll open it and take some quick notes. It looks like an order was placed and shipped in December, but arrived at the customer's warehouse in January. Row 8 is the likely spot for this one. I have an email regarding keyboard returns. Row 6 says it's about returns from a customer, and row 3 is about inventory returned to a vendor. I'll open this email to see that it's about keyboards we returned to our supplier. We'll use this exhibit for row 3. Next, there's a receiving report. This is generally for inventory we received from our suppliers. However, we can see that there's a customer return on the next to last row. This probably goes with row 6. Our next exhibit is an email about consignment inventory. This is probably associated with row 5. The last exhibit is an email about the motherboard cycle count. Row 7 is the only row that doesn't have an exhibit associated with it right now. Let's open the document and see if they go together. The email talks about damaged items, so row 7 is a great fit. Let's get started with the task. Row 2 asks for the unadjusted balance per the subledger on 12/31 year 5. We can see that this is $140,800. The computer chargers were purchased after year end and our terms are FOB destination, so this purchase will not be included in inventory. As you type in your response, you'll see that it is automatically formatted. Confirm that the formatted response is what you were expecting. Row 3 is asking about an adjustment based on a return. We've identified the email regarding keyboard returns as our source document. From the email, we can see that this return relates to keyboards purchased on 12/5. There are 100 keyboards at $25 each that are still in our inventory. As we've returned these items, we need to deduct $2,500 from our inventory. Again, confirm the formatting on your response. Row 4 says that there's inventory recorded in the subledger that wasn't received. We identified the packing slip from computer company as the appropriate exhibit. We can see that we ordered 100 cords but only received 80. When we compare this to our inventory ledger, we can see that we included 100 in inventory. We need to remove 20 cords at $15 each, or $300. Let's skip ahead just a little bit. Through the magic of television, the next several rows will be completed and we'll skip forward. Our final task is to sum the total. I like to run the total twice to make sure I didn't have a typo or clerical error in my total. I confirm that I have an answer in each row that required an adjustment, and the total is entered before I hit submit and move on to the next question. We can see that we have the correct answer. In study mode, I'll read through the explanation. If I have remaining questions, I will use the references link at the bottom to take me back to the textbook. Again, you'll want to practice the TBS so you can get them under about 20 minutes. Start with the multiple choice questions to develop mastery of the content before you move on to the more complex TBSs. By developing a plan for responding to the TBS from our first reading, we were able to keep the information from being overwhelming. Use context clues to keep the exhibits you need to have open to a minimum. With practice, I know you can be successful. In this video, we are going to walk through a journal entry simulation. This is a type of task-based simulation, also called a TBS, requiring you to complete one or more journal entries. Sometimes you may be asked to provide additional amounts in numeric entry format. Please note for journal entry problems on the actual exam that it doesn't matter what order you enter your accounts in, just that you have all of the correct accounts, no additional accounts, and the correct amounts are in the appropriate debit or credit column. As with all TBS, I like to start with a quick read through the instructions and the question. Here I can see that we're working with bonds. I know I'll likely need bond terms, face value, stated rate, payment interval, and the market rate. I can see that the bond proceeds have been provided, saving a present value calculation. We're going to use the effective interest method for amortizing the premium or discount. We should look at the directions. These will generally be the same for our journal entry TBSs. We'll click the cell in the account name column and select our account from a list. We'll then enter our debits or credits all as positive amounts, and we'll round to the nearest dollar. Note that not all rows are required. We will frequently see an extra row in our journal entry problems. Scrolling through, I can see that I will need journal entries for the issuance of the bonds and the first interest payment. Further, I'm asked for some amounts from year 2. This means my best bet will likely be to set up a quick amortization schedule for the first 2 years of the bonds. The initial carrying value is equal to the bond proceeds of $235,931. We're offering the bond paying 8% when the market only demands 4%. This means that purchasers will be willing to pay more for our stream of payments, which means we've issued this at a premium. Using the effective interest method, interest expense is the carrying value of the bond times the market rate of interest times the period of time outstanding. Our market rate of interest is 4%, and we pay interest every 6 months. So our time factor here will be 6/12. The cash payment is based on the contractual or face terms of the bond. This will be the face amount of $200,000 times the stated rate of 8% times the same period of time, 6/12. The premium amortization is the difference between the cash payment and the interest payment. We're trying to amortize the carrying value of the bonds towards face value at maturity. That means the premium amortization will reduce the carrying value of the bonds towards $200,000. We'll then carry the new carrying value from this calculation to the beginning of the next row. We can then fill down our formulas so we have the values we need for the journal entries and for the numeric response questions. The first task is to prepare the journal entry for the issuance of the bond. Again, remember that you can enter the accounts in any order. However, I like to enter my debits first in proper form. We issued the bonds, so the cash is coming in. We will increase the cash account with a debit for the bond proceeds we received of $235,931. Next, we need to record the liability. I like to skip a row and record the bonds payable. This leaves me the row in between to enter either a premium or a discount and still be in good form. We are contractually obligated to repay the face amount of the bond. This will be recorded as our liability, bonds payable of $200,000. Finally, debits need to equal credits, so I know that I need a credit of $35,931. We'll enter premium on bonds payable as our account title. Moving on to our next task, we are asked to prepare the journal entry for the interest payment on June 30th, year 1. We've already calculated our amounts in our spreadsheet, so now we just need to add account titles. We'll have a cash interest payment of $8,000. This is going out, so we need a credit to cash. Interest expense is a debit, and we've calculated the amount as $4,719. The difference between the cash interest payment and the interest expense is the amortization of our bond premium, or $3,281. We need a debit for debits to equal credits. Alternatively, we're trying to reduce our current credit in that premiums on bond payable account down to zero at maturity, which will require a debit in the interest journal entry. Next, we have a numeric response asking us for the interest expense accrual for the 6 months ending June 30th, year 2. The instructions tell us to enter a positive value rounded to the nearest dollar and enter 0 for a 0 response, which means don't leave it blank. From our amortization schedule, we can see that our interest accrual is $4,586. The final question asks us for the premium amortized for the same 6-month period. Again, we've already calculated this amount as $3,414. By reading through the entire problem, I saw that I would need amounts for both years 1 and 2. This meant the most efficient method to answering the question would be to prepare an amortization schedule rather than calculating each amount separately using the calculator function. I do a quick check over my response to ensure I've answered all parts of the question. I hit submit and can see that we got the correct answers. I will review the explanation provided and use the references to get back to the textbook if needed. By reading through the entire question, I was able to work efficiently on this problem. That should help me keep my response time under 20 minutes and possibly even less so that I have more time to spend on the more challenging TBSs. With consistent, quality review, I know you'll be successful in passing the CPA exam.